Hello, Alpha Chain traders. Welcome to my weekly crypto market recap. My name is Patrick Maldonado, and I am a junior cryptocurrency trader and market analyst at Alpha Chain Capital and founder of TCE Trading. So, just as usual, with this weekly crypto market recap, we're gonna be covering some of the news that happened during last week. We're gonna take a look at the market sentiment currently to see what potential trades or what potential bias we can see in the week. We're also going to be covering some market analysis. We're going to see at the past analysis, which was basically bearish. We're going to see how that turned in, what can we expect in the short and medium term. And we're also going to be talking, I'm going to be talking about some topics that you guys have found interesting, mainly about the crypto dominance, which is the Bitcoin dominance, which is a very important graph that you might be following, and also a little bit about risk management. So let's start with the market sentiment first. Just as usual, I will start with the crypto fear and index. So last time that we were talking about this, I hope that you remember that this was around 82. We have this for last week. That was actually the maximum that it achieved over that period of time. So this is very important. This is a very important graph, again, mainly because what it tells us, at least in a short time frame. Now here, what I pointed out last week is that whenever we have the market or the greed and fear index going up or going down, almost creating like bottoms, just similar to creating supports and resistances, we almost have kind of like where we can see the next peak, right? So I've been mentioning even during the pandemic, it was the same when it was starting. The greed index went all the way to the 60, almost 70 levels, and then went back down, and that was exactly when the fear in the market was happening. Now, why this is because people want to take profits, right? There's a lot of people who bought even from 3K, from I think the last bottom was around 4.8 or 3.8K. So you have to take into consideration that a lot of people have almost 3 times gains, even a little bit more, almost 4 times gains by now. We have seen this crypto and index, even though I was not showing you. I hope that you remember from before. So what I was pointing out once again is that when we reach these kind of tops, we expect people to start taking profits. And now something I wanted to say is that a lot of people have kind of like these weak hands, and this is mostly new people that are coming to crypto that are basically foaming because Bitcoin is going up. So you have to take that in consideration. This emotional kind of value is very important, and mainly for cryptocurrencies. It might not be as important for other markets, but in cryptocurrencies, everything is about sentiment, everything is about fear, and everything is about greed. So if we go through the first news, now we can see that here they were talking about Ethereum. A storm might be brewing for Ethereum. So what they say is that Ether's market sentiment spiking as long-term investors are up around 88%, and this is basically what I was pointing out with the crypto fear and greed index. So they are speculating that there's a potential sell-off. Of course, this news was from last week, so you can see if we go to Ethereum that we had basically what a lot of people call kind of like a dump. Basically the market turning around, and this has the potential to continue, and we will be talking about that during this webinar. But the most important part here is actually the different wallets that have been increasing. So if we go here, over the past 30 days, the collective balance of Ether mining pools has shrunk by more than 80,000 Ethereum, suggesting some level of concern among the Ethereum mining community about coins' short-term price potential. Again, we're talking really about the short-term here. But this is kind of normal whenever that we have any crypto or even Bitcoin spiking up. we know that we can have these sudden corrections, and I spoke about last week with a Bitcoin chart that it was pretty normal even in the last real bull market. Even we were going up for so many percentages, we still had about 30% corrections, and that was very normal because of that volatility. So it's normal to expect these kind of slight corrections, right? So he said it's on-chain data points to a stream of recent spikes in the dormant circulation. So these are the wallets that have been storing Ethereum. They have moved in the past 365 days. Over the last month, the dormant circulation has increased by 58.6 compared with the month before, pointing to a potential sell-off from ETH holders in the long-term investors. So again, here we're kind of speculating that people are starting to move their Ethereum, and they are starting potentially selling because the price has been going up. And this is something that we could potentially relate as well to this DeFi movement, which I talked about last week, that we could potentially consider it as a bubble. Now, we're going to be talking more about DeFi in the future just to grasp that concept, but it's something that you need to take into consideration, that there has been a lot of hype, even though in some projects that may not have that infrastructure ready, or they don't even have apps in their platform. So that's a very important point, just for you guys to be aware. Now, the second very important news, I don't know if you know who Robert Kiyosaki is, but he's basically the author of a bestseller, which is Rich Dad That. It's a very good book. I totally recommend it. Even if you are starting just with kind of having this financial mentality, is a very good book for you. But he says is that there's no longer any time to think about buying safe havens like Bitcoin as dollars of weakness continues worsening. And here, of course, we're talking about that dollar index, how because of all the extra supply of money, because of the printing that has been happening due to the pandemic, the dollar has basically lost some of its value, right? And we covered that that chart last week. We're probably going to head a little bit to it in the market analysis. But again, this is the sentiment now. A lot of people are betting on Bitcoin rather than on traditional markets. We even have Warren Buffett selling of the banking shares, of the financial shares, in order to go into gold, which should play as an indicator of where the market sentiment, at least for the smart money, the people who have a lot to invest, is heading to. Now, something that I really want to talk about regarding this specific scenario is that a lot of people are currently comparing Bitcoin with gold. Now, they have a lot of properties that are very similar, and there's a big potential in the future. Now, we as traders, we can't just be speculating and say this is what's going to happen in the future, right? I mean, if you have read Trading in the Zone, which is one of the books that we talked a lot about during different webinars, not only on here, I'm going to bring more of the topics in there, but the point is that you really need to consider kind of like what's happening right now and what can happen in the future, and have them as something separate, right? What I'm referring to is that if there is a possibility of Bitcoin becoming more like gold, okay, we need the actual facts to support that, right? We can't just speculate and say, hey, that's going to happen, until it really happens. And then when it's actually happening, then we have to adapt our trading to that. And that's why cryptocurrency in general is a very interesting trading environment, because you really have to adapt very quickly. The trading before 2018 was completely different to the trading post 2017, post 2018, and it's still changing up to right now. Now, if we take a look, even if we go at the graphs right now, we can see that the correlation in any case would be mainly with the traditional markets, right? With the way this has been going on. If we take a look at the bigger time frame, we can see that they did a similar move where there was a strong move to the downside and then continuation, kind of this big recovery. So in essence, we are more correlated to the stock market than if, for instance, now I go to the gold charts. I hope that you can see that the gold charts have only been going up, and they have not, maybe they did this small correction around here, but I hope that you see that the price is way more parabolic than what we obtain in Bitcoins, meaning that we are more correlated to traditional markets more than gold. So I'm not saying that this cannot happen, but when it does, we are going to be seeing more correlation with gold in terms of price action at the very least. So don't always buy when people say it's actual gold. I know that there's a lot of hype, but this is part of FOMO, fear of missing out. Just the fact of people say this is what's going to happen. You should invest right now. And again, you are traders, so you don't care if the price is going up. You don't care if the price is going down. As long as you start as long as you put trade in the correct direction, right? That's very important. Now, the next news is what top U.S. politicians and both president of the United States election candidates think about Bitcoin. Now, this can have important repercussions in the future. Why? Because when the U.S. election happens, depending on who gets elected, there might be some regulation constraints or regulation issues in terms of cryptocurrencies. Now, usually what tends to happen is that in terms of the general environment, right, we saw this in the last elections, when there is potential of a Democrat kind of party winning, there's more a bearish sentiment towards the dollar. I mean, and this because usually with Democrats, they want to increase taxes. So there's a lot of kind of fear that companies are going to be less profitable, thus it tends to affect a little bit the economy in that sense. And now if we take a look at the Republican, or at least what happened last time, is that the dollar actually had a lot of momentum, actually rallied to the upside. Now, what I really want to focus here is what they had to say about Donald Trump and Joe Biden, which are the strongest kind of contestant. Of course, Donald Trump would be playing in that re-election part. But let's read more here. So the 45th president of the United States is very much aware of Bitcoin, and he doesn't like it. In July 2019, Trump unleashed a scathing attack on the premier cryptocurrency in a tweet that came days after the launch of Facebook's Libra crypto project. So if you remember, Facebook Libra had a lot of controversy. A lot of people didn't like it. A lot of governments did not really accepted the fact that these companies have so much strength, they have so much power, and now they're heading into finance. So he categorically stated that he wasn't a fan of Bitcoin. Cryptocurrencies are in money and their value is highly volatile, something that is true. Now, Trump's administration has failed to create a clear regulatory framework on digital currencies and blockchain. However, in March, the Office of the Controller of the Currency announced the appointment of Bitcoin bull Brian Brooks as its chief operating officer. That appointment was viewed as an endorsement of blockchain technology by the Trump administration. Now, in terms of what he thinks and what the administration is doing, is kind of a little bit different. But the general sentiment, at least from the perspective of who is getting chosen, is not particularly bullish for crypto. Again, we have seen that the first thing that are trying to support is this idea of America first again, which would mean more guiding towards a strengthening of the dollar rather than other currencies, for Bitcoin, for instance, in this case. Now, in terms of Joe Biden, the former U.S. vice president and the only Democrat contesting for a presidential seat after Bernie Sanders dropped out, is presumed to be a Bitcoin. So now it's presumed. We have no official statements, as we're going to be reading right now. In one of the articles, Biden was portrayed as a Bitcoin candidate. While he hasn't come out publicly to endorse cryptocurrencies, Biden is a strong supporter of technology and innovation. Back in 2018, he commented about the internet and dubbed it a neutral source. The internet itself is not inherently a force of democracy or oppression for a war of peace. Like any public square or any platform for commerce, the internet is neutral. So it's more of a neutral standpoint, but because they have support of technology and innovation throughout his career, people speculate that he would be kind of pro Bitcoin. Now, again, there's not a lot of point in speculating who will win and then what will happen after that. But if we have the sentiment, we can see some investors are gonna be moving depending on what's happening, and we usually see that with fundamentals, with high impact news, that when they happen, there's a strong movement on the market, and then prices tend to stabilize a little bit more. Now, the last piece of news that I wanted to talk about, it has to do with the DeFi, with decentralized finance. And again, this is talking about potential bubble. This is nothing that we can confirm. We have seen the prices of different altcoins on the DeFi space growing up, despite not having the infrastructure, despite not having, let's say, all of these decentralized apps, right? The one that we know that has most of them is the Ethereum platform. And still, there's a lot of hype with Ethereum 2.0 that we might be covering in another webinar. Now, one of the things that I wanted to talk about in terms of the DeFi and blocking or staking, so basically taking away out from the potential supply or the potential liquidity of the market, is locking a specific amount of coins, right? Now, what does that entail? So basically, when people are staking and lock these coins, they take liquidity out of the market, right? There's less market participants. And even though you can't, let's say, make the reasoning that because of this there's going to be more demand and less supply and the prices will go up, which is the traditional way of thinking, you also have to consider that because there's less market participants, not only this is a possibility, but also prices are going to be more volatile, right? Because you don't have the same amount of people buying and selling. You are just locking these altcoins away. Now, this is very important because we have seen that there's a lot of kind of these schemes, pump and dumps, they are called in the cryptocurrency market, where we see that prices just gain a lot of momentum just to fall back where they started. And this is pretty evident even in those currencies that have gone up the most. Now, here what they are talking about is about wrap BTC to yield farming, and what they call yield farming and chill. So what is wrap BTC? We can see it in here, but basically it's kind of like a gateway in order to invest in Bitcoin and get access to this decentralized finance sector. So launched in 2019, WBTC is an ERC2 token that is pegged to the price of Bitcoin. It allows users to seemingly transfer Bitcoin to the Ethereum network and interact with smart contracts. So again, it's basically this gateway that for people who are investing in Bitcoin and still don't want to miss being part of this DeFi platform, they can do that with WBTC. Now, is this good or is this bad? We cannot tell for sure, right? We can't just tell after the facts happen. But it is seeming that a lot of people are just trying to join and doing this yield, which is basically lending money to people, just try to create as much percentage as possible and just lay low. Now, this might be good in a sense in terms of adoption of the technology, because we have been seeing that a lot of people are jumping because of DeFi, but also we need to take into consideration that most applications in the DeFi environment are basically lending platforms, right? We're talking about debt, and we know that currently there's a lot of debt in several countries. So this is one thing that you might need to consider when doing your analysis, at least in a fundamental point of view, right? If there's a lot of hype around a platform that's basically encouraging people to be owing other people and to increase debt overall, it can be very alarming. And the reason I'm saying it can be very alarming is because even within the network I have on TCE trading, there's a lot of people that what they are doing is basically they are borrowing their own money, so basically leveraging themselves in order to buy other assets. So you can see when you are trading more or where you are investing more that you can afford to lose with leverage, how it can very badly if people are not careful. So now let's head into the market analysis. We're gonna start with a macro analysis here with Bitcoin. Something that I want you guys to notice, and what we were talking about last week, is that even though the price was going up, we were hitting pretty much this resistance at around 12,000. We actually did kind of like a fake out, because if we zoom in here, we see that the Bitcoin not only went out of this line, it closed outside. So this was a classic bull trap in terms of the longer time frame. And again, this is why I mentioned before, a lot of people get trapped in here, and this market is very volatile, as you already know, and you need to approach it with a different kind of mindset, because if you only go with traditional kind of technical analysis, sometimes you might see things not working or things doing the opposite. That's why having a sense of the market sentiment in the big picture is very important. Now, we had the potential here, if you can see, to have a potential ascending triple. So again, what you would be expecting from a technical analysis position was this breaking to the upside or closing out of this line and then heading to the upside, but that's not what was happening. And actually, something that I also mentioned is that all the way up here we have been creating divergences upon divergences. So for those of you who might not know what a divergence is basically when the price action is reflecting something different to what the indicators are saying. So for instance, here we can't really see it. The RSI is basically going down around here, but if we take a look at the price action, from peak to peak it's going up. So that's what's known as a divergence. In this case, it's a bearish divergence. So if we take into consideration the bigger picture, we see that the price has been going up despite these levels being almost the same. Of course, you can say that in here it was invalidated, but in terms of cryptocurrencies and in terms of my experience, I have seen that these still have value, even though that theoretically or technically they have broken. Now, the first thing also to point out in here is 20 EMA in the daily chart. This is a very, very strong indicator for those of you who are starting. You might want to have a graph, at least on the daily time frame, with this specific EMA. And I can go back into the past so that you see how this indicator has really been taking place. Of course, sometimes when it moves sideways, you're not gonna have this kind of relevance or its kind of importance on the price action, but generally, for instance, here we broke to the upside, and then it has been a strong support from there. Even if we continue going to the upside, again, here we see that the price touch in here, continue going up, support, continue going up, even here support going up until it actually breaks to the downside. Now, this specific scenario, this specific area around here was very volatile, right? It was very volatile, and of course, when there's a lot of volatility and the market's moving sideways, the EMAs tend not to be very important. But once again, once that direction went to the upside, it grabbed as resistance. Here it tried to do a fake out. We saw this huge wick and then coming back down, and again behave like resistance. Here I hope that you see behave like a support once, twice, 3 times. Here it failed, and then with as a resistance once, and so on. So this is a very important indicator, one I've been following as well. Now it seems that finally we might see it really breaking the downside. Of course, we are gonna be waiting until the end of the day to see if it actually breaks below, and also if it breaks below, you might expect the price going up the next day just to retest and see if we can have a confirmation. This might be one possibility. The other possibility is that we just keep going down. We have seen the fear and greed index is actually starting to go down, so we might have a shift on this market sentiment. Now, another thing that's very important for you guys to consider in the macro analysis, or at least with Bitcoin specifically, or maybe not only Bitcoin, but also altcoins, but I mean cryptocurrencies in general, is this pattern that they call the BART pattern, right? So a BART pattern is basically when the price, we can see it around here, where the price goes to the upside, stays, let's say it moves sideways, and then it goes to the downside in that same kind of fashion. It's very quick. Here you can see it as well. The market goes down, it moves sideways, and then straight back over it where it started. Now, there is a potential scenario if that were to happen in here, which again we have seen even before during the past. There is a potential here, go up, move sideways, and then coming back down. Now, this is again, this is not scare people and say this is actually going to go up, but to point out that more and more technicals are showing the potential of a correction in here. Now, if we put the daily pivot points around here, which basically lays the volatility for the past session or the upcoming month, we see that there is a strong potential that it wants to retest this pivot. That's something very usual in Bitcoin. Even if we go to the past, we can see how this pivot point line, the main line, acts as a support or as a resistance. The price usually wants to go in there. If we go in here, again, support tries to go to the upside. In here, you can clearly see it was going to the upside, went back, and then where did it find support to bounce again? In that pivot point line. So there's a strong possibility that if this kind of movement to the downside continues, it not only breaks this 20 EMA, but it continues going to potentially this pivot point. We have here another strong support at around 10.5K or 10,500. And why is this strong support? Well, because it was basically the line of resistance from these two past movements, which basically acted as a ceiling previously, at least for the Bitcoin price action. So it would be very normal to expect price going down to retest, because even around here, we didn't really have a strong retest. We just have a crazy volatility and continue going to the upside. So this is something that I'm looking on. I already have some shorts, so I'm gonna go through some of the trades that I actually have in place. But before that, just to mention once again, and as we all know, repetition is almost the master of any skill. So this is why I might be repeating some concepts. I might go through some of the charts again so that you are aware about them. And in your analysis, you can start putting them into consideration. So something that I talked about is the Bitcoin CME Futures. We talked about these gaps. We talked about this idea of self-fulfilled prophecies, right? Just the fact that people are thinking that price is going to go down or going to go up, just the fact that people trade in that sentiment in that way ends up making the price going into that direction, right? So we talked about these gaps, as you can see here. Basically, during the weekend when the price action moves a lot, we can see that it creates a gaps in the CME futures. And in the past, all of these gaps, at least most of it, well, I still haven't found any that hasn't filled. They tend to fill with further price action, right? So I mentioned around here, there was this gap. And what happened after this downside of the pandemic, after this swing, the price went back up. So it ended up filling that gap. Of course, you might say that this is normal volatility, but in fact, a lot of people are trading this. And the most recent gap that we have over here is around 10,000 to 9,500. So there's a lot of confidence. And for those of you guys who don't know what confluence is basically when different indicators are pointing something similar. So that's something important to take into consideration. Basically going against the path of least resistance, right? So when you have a lot of confluence, you have a lot of resistance towards a specific direction. In this case, we can see that the potential targets, if Bitcoin were to go down, we have not only again this potential pivot point line, we have a very strong support level at 10,500, and even below there we have more support. We also have potentially this peak of the 20 EMA, and we also have this potential target for a lot of people, right? So there's a lot of confluence for at least maybe, again, this is not certain because we don't know what's going to happen in the future, but there's a potential case for a bearish scenario, at least in the short time frame. Again, you as traders need to take into consideration that what's most important for you is what's going to happen next, not what's going to happen in 5 years, right? Because we're not going to put trades for that time frame. Now, another thing people wanted to know about is the Bitcoin dominance. Now, what I want to say about Bitcoin dominance chart, you can go in here, is BTC.D, is that in my experience, way before, again, the Bitcoin dominance has behaved very different. What I mean is that if we take a look back here at this price action, usually when the Bitcoin dominance started going up, it meant that Bitcoin was going up, right? And it also meant that people were exchanging their altcoins in order to buy Bitcoin. So usually you had a good correlation between the movement to the upside versus the price action of Bitcoin. Now, I'm saying this was before because it has started to shift right now. We need to take into consideration that way before, after 2017, or in that area between 2017 and 2019, there was not a lot of emphasis, for instance, on stable coins. There was not a lot of emphasis even right now on DeFi, right? So these are a lot of things that are starting to change the way the Bitcoin dominance behaves, because before it was that if you see the Bitcoin dominance going up, altcoins would be bleeding, and vice versa. If you saw the Bitcoin dominance going down, altcoins would be receiving that amount of capital. But now it's not necessarily the case, and this is what I want to point out now. It doesn't mean that you can't do analysis on this just again to see the macro picture, because you could potentially say, if we take a look here, normal price action would say, okay, it bounced from this potential resistance and a potential support, then you might consider the price going up back again, and in that case you could see Bitcoin going up, right? But now it's more difficult to analyze this graph, and the reason is because we are seeing the potential of this coming down, right? So it's another potential case is that the Bitcoin dominance goes up while the price comes down, and this is where most of the altcoins are really punished in terms of price action. So as I said on the last webinar, it's very important for you to consider that altcoins are very correlated to the Bitcoin price action, but are way more volatile because they also have their own Bitcoin price, right? So if the price of Bitcoin is going up and the price of the BTC for that particular altcoin is going up, you will have a strong movement to the upside. So it's still a movement correlated to the price action of Bitcoin, but depending on this graph, what you obtain, it might be even more, even stronger in that sense. So that's something I wanted to talk about in terms of the Bitcoin dominance, how it has changed mainly from previously to what is trading right now. Because again, you would think that because this DeFi and all these new applications coming up, the price of, or at least the Bitcoin dominance, might still go down. Now, we will still have to see what the DeFi sector brings out, how much hype is on it. But usually what you have is that a lot of people also trade altcoins with leverage. So when they're getting kind of liquidating or they're losing money, usually the first thing that they did before was the only gateway to exiting altcoins was trading them against BTC, right? That was the only reason. That's why the Bitcoin dominance was more important way before. But now we see that there's a lot of pairs. If you go to Binance, there's a lot of pairs that are trading against USD Tether or against other stablecoins. Now that this is happening, there's less, these altcoins are relying less on Bitcoin trading that they were before. That's why this Bitcoin dominance is kind of losing a bit of importance. But again, for the bigger picture, it's good for you to see and analyze. Now, this is basically what I wanted to talk about in terms of market analysis. I might go quickly through some of the trades that I have, just again for you to see what I was doing, why did I do it. And I was, I still have a bearish sentiment again, because we have been going up a lot and we have not had any type of correction or big correction around 30%, which is again normal in Bitcoin. So there's a lot of hype, but there's not a lot of, let's say, healthy movement in terms of the price action. Now, the reason here I was shorting, this was on my personal account, was mainly because, again, of this confluence between this resistance around here, which was very important, and the fact that we have been creating higher highs around here, but on the RSI we have been creating higher lows. We have been creating divergences upon divergences with the price action, and there might be a lot of momentum, but the momentum you grow, or the Bitcoin price action grows into the upside with divergences without really going to the downside or to oversold, the more momentum there is to actually have a big correction. Now, in terms of this Ethereum trade that I took, it was mainly because of the pivot points. Now, if you see on the markets, the pivot points in the cryptocurrency market, they play a very important role. Actually, I was not using this indicator until I started trading with Alpha Chain, because I did more research on this. And surprisingly, it has been a very strong indicator, or a very strong support and resistance point. Again, this might differ from market to market, so you can't expect Forex behaving the same way. But what I have seen is that the main pivot point line has acted as strong support or resistance. Now here, I wanted to explain more of the Ethereum trade. Here we need not only we're breaking strong potential support from there. We have a line in here, then we broke to the upside. So we would be expecting, like we saw in here, the price going up. But when we start seeing these pivot points, when the price breaks to the downside, then goes up, it acted as what? It acted as resistance, right? The price went down. And then with the new pivot points, this is exactly what you're seeing. The price tried to go up and it acted as resistance, right? So this is the logic of the trade. Again, grabbing into consideration confluence. Why? Because look at the stochastic RSI, it was overbought. If we take a look at the MACD, again, it started losing momentum, so that was a good opportunity to enter the market. Now, in terms of my other trade around here, I still have the same two trades on Binance. I added this on Litecoin. This is on the Alpha Chain account. Again, same dynamic. We were doing a lot of divergences around here, right? We have some potential resistance in there, and again, this is the confluence that you want to look at. Strong psychological numbers here. I enter around 65, but taking a look at the RSI in particular here. Why? Because these divergences tend to more or less be the initiators of strong movements to the downside. So I just wanted to bring this up, and just to finish kind of like this whole webinar, I wanted to talk a little bit about risk management for crypto trading, because that was an important topic that a lot of you guys wanted me to discuss before. So in overall, risk management stays almost the same just for trading, right? You want to have a stop loss, you want to have a known percentage or exposure per trade, so that stays the same. Now, what really changes in terms of risk management with cryptocurrencies is the way you're approaching, the way you are trading, right? So this will highly depend. It already depends on the specific trading style that you choose, regardless if it's in FOREX, if it's in equities. It really depends on your trading style. But in crypto, you really have to adjust it. Now, why I'm saying this, because it differs from swing trading, which is less frequent, longer trades, more than one day. These trades, I've been almost 2 weeks now. Usually I will aim for 1 week, 2 weeks at maximum, or that's kind of like the average. But there's also day trading, right? Some of you might try day trading. That really is up to you. That's nothing that I can tell you this is better or it's worse, right? That's up to your trading style. That's up to your lifestyle now. But in terms of how you approach the risk management, you have to take into consideration 3 things. And if you can write it down, it would be good for you. So first of all is the goals that you have, right? Second, the feasibility, and then the implementation of the strategy. Now, I will potentially explain more about my personal strategies in future webinars, but usually I use the pivot points, as I was mentioning here, right? Now, according to my backtest and according to the trades that I've made, I know that my personal strategy usually has 1 or 2 opportunities per week maximum, right? So if I take that into consideration, you might say, okay, if you have 1.5, let's say, trades or potential trades per week, well, then you multiply that times 4, right? To know more or less your monthly objective. So if I take into consideration the fact that I have a 1.5 times 4, right? So if I multiply 1.5 times 4, then I have the number of potential trades that I might be doing in a month's time, right? So if I do that, I would have potentially 6 trades. That's not my only strategy, this pivot point bounce strategy, but I know that I have 6 trades, right? Now, if you take a look at risk management allowed in Alpha Chain, for instance, the normal guidelines are maximum 0.5% per trade, at least on cryptocurrencies, a daily threshold of 1%, and a weekly threshold of 3%, right? Now, this is where you need to really take into consideration your own strategy, how it performs. And that's why you also need to measure how long that trade takes, how many can you take per week. If you're on for instance, if you're day trading and you can take up to 2-3 trades per day, and you have during the week 10 or 15 trades, then of course your risk management or your exposure should be a little bit less, because you're not relying on longer time frames. You're going to have more losers because you are attempting to go into the market more frequently, right? Now, with this into consideration, if you have 0.1% or 0.2% risk per trade in a day trading form, you might have a case that's more profitable, or at least you can meet the goal. So in terms of this top-down approach that I mentioned, if your goal, at least for you who will be starting to trade with a cryptocurrency account, with a professional account, you know that we have to achieve around 15%, and there's to the upside just to finish with the evaluation period. I think that might be the case, and we also have a set number of trades, right? Well, what you need to start considering is, okay, if that's the goal, how long do I want to take, or more or less, right? So let's say you choose 3 months, so that's 5% per month. So can your strategy adapt in a way that your risk management allows you to potentially make those 5% per month? I mean, that 5% is a lot, right? So this is what you need to take into consideration, your own strategy. Now, if you're doing day trading, again, you're making 3 trades per day, or maybe at the end of the week, 10 to 15 trades, then you can allow yourself to expose a little bit less, right? You can potentially expose 0.1 or 0.2, and still, if you have, let's say, from those 10 trades, if you have half 5, you are almost making 0.5 if it's 1-to-1 ratio, or maybe almost 1 to 2%, right? Now, in my specific case, and for you guys that want to do more swing trading, if you have 1 or 2 trades per week, if I trade with 0.1, 0.2%, there's no way that, even if I'm not wrong, or even if I'm correct 100% of the times, because most of the risk-reward ratios that I use is between 1.5 to 2, there's no case where you can trade 0.1, 0.2% and meet the goals, right? The feasibility disappears. That's why I'm using kind of like 0.4, 0.5, which is the maximum allowed per risk, because I'm a swing trader, right? I'm relying more on just a few trades rather than just trading a lot. So this is why I wanted to bring this topic, because it really depends on your strategy. It really depends on the back testing. It also depends on the feasibility of that goal, right? You can't force, for instance, I can't force my trades and trade more based on the nature of my strategy just to try to into that goal, right? And the last thing is the implementation. Is really okay. If I have to risk, let's say, 0.5%, I know that the winning trades that I have are gonna almost 1%, right? So I'm gonna be able, or it's gonna be more feasible to achieve that goal than if I was trading at 0.1 or 0.2. Now, this is not for you. This is not an incentive to be like, okay, trade a maximum amount, but to consider your trade, again, your trading style, your trading strategy, your back test, see the goals, see what you feel comfortable with, and then try to implement everything. But in any case, traders, I hope that you enjoyed the webinar.